Good evening, all. Ira Epstein of Linn & Associates with the day after. Yeah, it is Monday, and it is the day after the crash on Sunday night in the metal markets. And today is August 9th, 2021, and we're sitting here with your metal update for this Monday evening. So, as we take a look at the markets, you're getting a little bit back of a bounce in the gold. It came nicely off the lows. We'll go to that in a little bit. Silver got smashed as well. It's come back. Copper, not really much of a bounce, nor in the platinum market. The dollar, you got to remember, the dollar was around 91.82 4 days ago. So it's made a big run to the upside. At the same time, you've pressured the euro currency back down rather hard. Now, as I said, we had a flash crash, and you see this just with what this market's done. This is a weekly area chart of closes. So far for the week, we're down 1.78%, and that is taking the last trade right now, and that's down 31.40. However, the market did worse damage than that. You actually got down under the 1680 level, so this rally's $50 off the low as it is right now. What happened? Well, I keep telling people about the yin-yang impact, and it's something I learned a long time ago, and it's there. And here's the impact. In this case, we get a jobs data report Friday morning, 7:30 in the morning, that is bullish, gets the market thinking. The Fed might consider tapering as soon as the Jackson Hole Symposium at the latter part of August, I think it is, middle, something right there. I'll look up the dates. Possibly to enact that come December, and of course everybody gets excited and goes, well, things are going to get even worse than that. They're going to raise rates sooner. Well, if you're really looking at the JOLTS data, the data that's coming out and others, jobs are not getting filled. There's postings galore. People need to hire, but people aren't taking those jobs. That's just the reality of the situation. Yes, we saw the jobs numbers go up, and that's very, very good. Plus, June was revised. So let's get back to where we were. Comes out at 7:30. What time do you think that is in Asia? Japan, China, and so on? That's evening. Their markets are closed for the week, typically. They don't operate 24 hours a day everywhere. So those people, evening there, go to bed, they wake up, look at the weekend, see what we're doing here, and for whatever reason, and this is what I call the yin-yang, we do one thing, they have to interpret it, and then it moves to Europe. Well, they interpreted it real bearish, and there were some big attempts at selling. Now, I'm not sure if it's getting out of longs, putting on new shorts. I don't know what it was. Doesn't matter. It was big. In a Sunday evening, when there's light volume, always. You had a big day, but the spread between bids and offers insane, and the market drove down. That's what occurred. Now we're back to where we have to understand what is going on, and we just go to the chart action. First off, what I'll never understand is people going through some of these jobs reports trying to be heroes. When you get a big number, the word is big. The market tells you if it's a big, important number before it comes out. Watch financial TV, read a newspaper. You'll see the analysts are really concerned. What's this going to show? Big Fed, like the next Fed meeting, be it the August Symposium or the next Fed meeting. Everybody's going to be all over it, looking to see what did these two good jobs data mean for the Fed. It's going to be a big number. Why would you go through it? What if nothing happens? What if they downplay it? You don't know, and you don't know how the market will react to what they do. In this case, the wipeout occurred. Now think of all the stops in here that have been run. Where would somebody now have a stop? Down under 1680? It could be, but you've already done the damage. The panic has happened. The market also gave a warning. Now, if you take a look at this market on Friday, the close Friday, I had up for you this line that was still valid. You broke it Friday. That was the end of that support line. Now you're under all this. I certainly would not have predicted the market going to 1680. So if you're thinking that's what I would have said, no. But I would have said you've just broken through the last support that I see on the chart for quite a while. Maybe 1750 is the next zone. Well, the market went through that and a lot more. Now you've got another problem. Let me give you this one. You've got the 18-day average in red under the 100-day. The 100-day in green is under the 200. It's a classic bearish setup. So I was on BNN TV, that's Bloomberg in Canada, doing a lengthy interview today, and I'm being asked, well, where would you buy gold? And I'm going, why do you want to buy the gold? Why not think of going short? You're a futures trader. Short, long, doesn't matter. So there's plenty of resistance above the market. You broke the back of this market. It doesn't respond in inflation scenarios. Now we're at the other end of the cycle where we're talking higher interest rates again, and you want to buy gold? Be on your own. When you look at the Bollinger Band, I can make arguments you're going to get back within it, but what's the trend? Unless you're not understanding trends, certainly the momentum is all down. You can get bounces at any time. I would expect the bounces. Did this get overdone? Well, it certainly did an awful lot in a 48-hour period, so I would think that there's going to be some bottom pickers in the market. Momentum, it's not even oversold. This market's gotten away from being oversold on these monster breaks. That just adds fuel, in my opinion, right or wrong, to the bear camp on the hard rallies in this market. The gold-silver ratio got annihilated, back up and just keeps staying over. So before we ended up on Friday, this is where we were. And you can see the market had been hanging here Thursday. I didn't do an update with you over the weekend, so you didn't get a chance to see this. And here's the market, and here's today's action. Certainly held that, which keeps it going to higher numbers, which is bearish to silver. And here's the silver. It too did a washout. You were just in a market in the 26.30 area. And now you're back to 22.95. Look at where this market was. Am I correct on that? 26.09. And you go down to a low today of 22.29.5. It's monster break. That's $20,000 almost in a futures contract on a full-size contract. So if you think people weren't being taken out of the market, margins, or that they're still not on margin calls, you'd be very wrong to think that. Yes, you've now got yourself under the Bollinger Band. I look for a rally, but here too, I've got the 18. It's not quite as bearish a moving average setup because the 200-day is still, what, underneath the 100, but all you need is a 20-point reversal, then you got everything bearish there. In plain English, I'm sure I'll be wrong at some point here, but that's a bearish scenario, not a bullish scenario. The copper market is getting its wherewithal. It's coming down into oversold condition, but I like copper in ways, and I don't like it. First off, this chart action is not bullish, nor has it been. This is where you finished up on Friday. Actually, right here. I'm sorry about that. Lower highs, lower low, under both moving averages. Unless you get back over 442 and a fraction, you're in a bear trend. Now, I don't know how low it could go. If this didn't hold it, I would have said maybe it's going to the lower Bollinger Band. I don't know. And I still don't know. It could be going there, but it's oversold. In addition, we've seen the first mine strike called for tomorrow in Chile. So that's the first one. Now, if they go to the bigger mines, watch out, because this one was one of the mines owned by a group in Japan. It's still a good-sized mine, but the talks aren't going well. And the two big ones are in final stages of talks. Haven't heard how that's going to go. If it doesn't get settled, and not settling this one probably means those don't get settled, watch out, because that could flip this chart on you if you cut back on supply. Will it just go like that? No. There's plenty of resistance here at the 100-day and the 18-day average. So yes, I think it can encounter resistance. If it gets over 442.15, I'll take a different look, but it won't turn it bullish. If it went straight up, I'd still have a lower low, and over that number, a higher high. In the platinum, when I last talked to you on Thursday, I said we're just sort of stuck here against I'm leaning on that lower Bollinger Band, which ultimately, if it stays like that, drags and causes an embedded situation to develop, exactly what you have, which means rallies between the Bollinger Band and this 18-day average, and there is a way to figure out the zones to sell into those, but I teach that in the enhanced Bollinger Band course. That's where I think the pros are looking to sell the market, and they'll come out of shorts if the red line closes over 21, in my opinion. That's what I teach. Palladium, oversold, not like the platinum market. Lower highs, lower lows. Target 25.89, not too far away from here, about $20. Even if you get over 26.7250 in this chart, what happens? You negate the downtrend, you don't begin an uptrend, and look at how the Bollinger Band arms are wrapping around the market. Volatility not coming in, coming out of this market. And you would think I'm nuts to say that today, but it's the reality, because that's what a lot of the Bollinger Band looks at, is ranges, to get an idea, and ranges measure volatility. As I said in the dollar, up and away. So the market had its run on Friday off the jobs data. Further coming up, where do you think I think the market's going to fail? 93.21.5. Should it get there? Why? First challenge of a Bollinger Band, not embedded. Ethereum, what do I teach if you can get in on these bands and you start just staying right on them? And we were talking about this last week. When that occurs, you start yanking on the slow stochastics. If you can get them up several days in a row against the band, what have you done? You've embedded, which means the first breaks in the market will be the ones that the pros look at to come in. They haven't had the opportunity. Something else brewing that's bullish. The 18-day average is starting to make a run towards that 100-day. Looking back, this certainly looks like a very important bottom that has come and gone away. And remember when it was down there, people were talking, oh, Bitcoin's next move's $20,000. Now I just heard tonight it's going to $50,000 right away. Okay, you're at 46,000, not too far away. Then they'll come out and tell me it's going to 60 next. You play that game. I let the amateurs have their day and let them I wish them the best. If you want to learn what I do, want to learn more for yourself, understand the research, let me tell you what I do. On my full research package, I start off with a morning subscriber video. Then at 11:30 a.m., I write a market report that looks just like what you're seeing behind me with buy and sell recommendations, and I update what I said then. I then do another update that comes out before 8 p.m. at night. Why? While I'm doing one video in the morning for both my morning subscribers and the full subscribers, I'm updating for the full research people everything. They're getting the full package. They're seeing more trades than the other people likely see. Now, window envelopes, they're standard deviations from a moving average. I have my own way of doing them. They're part of this package. So when you get this, you could try it, you see if it makes sense for you. I'm not asking you for a credit card. I want to give you a free trial. So call my staff, 866-973-2077. You can go to our website. On the bottom right hand, it says free offers. What do you have to lose? It's free, and we're not asking you for a credit card. Duh. I'm Ira. You have a good day.